York City suburbs are about to absolutely take off in 2026. And if you get in early, you could see massive gain. I'm talking about places where prices are still reasonable, where new infrastructure is coming, and where smart buyers are quietly positioning themselves before everyone else catches on. Don't be like most people who only realize a suburb is booming once prices are already too sky high to afford. By then, you've missed the opportunity. I'm Erin Wheelock with Luxury Living NYC, and in this video, I'm breaking down the factors driving growth from new transit projects to affordability trends, and revealing the 5 New York City suburbs that could see major appreciation in 2026. If you're thinking about buying in the suburbs, or you're an investor looking for the next hot market, this video could be worth hundreds of thousands of dollars to you. So let's get into it. Before we dive into specific suburbs, you need to understand what actually drives price appreciation. It's not random. There are clear patterns and indicators that tell us which areas are about to boom. First, infrastructure and development projects. When new schools are being built, when transit links are being expanded, when major retail or mixed-use developments are announced, that signals demand is coming. Developers don't invest millions of dollars unless they see growth potential, obviously. Second, affordability compared to neighboring hotspots. When buyers get priced out of one area, they don't disappear, they move to the next town over. If you can identify where that spillover demand is headed, you can get in before prices adjust. Third, population and demographic shifts. Are young families moving in? Are professionals working remotely choosing these areas? Are investors buying rental properties? Is there a new equinox coming in? These trends tell you where momentum is building. Fourth, rental yields and investment potential. Some suburbs offer cash flow that Manhattan investors can only dream of, literally. When cap rates are strong and rental demand is solid, investors pile in and drive prices up. And fifth, lifestyle appeal. Parks, walkable downtown, quality of life. These intangibles matter more than ever, especially post-pandemic when people are prioritizing space and community. Now let's look at the 5 specific suburbs where all of these factors are aligning for 2026, shall we? New Rochelle and Westchester, suburb number 1. If you're not paying attention to New Rochelle right now, you are missing out on one of the biggest transformation stories in New York City suburbs. Here's what's happening. New Rochelle has undergone massive rezoning and development over the past few years. We're talking about billions of dollars in new construction. Mixed-use buildings, luxury apartments, retail, restaurants, a completely revitalized downtown. The Metro North train gets you to Grand Central in 30 minutes. That's faster than some outer borough communities. I mean, literally. And the pricing? You can still find condos and homes here for significantly less than nearby Larchmont or even Scarsdale. But here's the key. The new development isn't slowing down, it is accelerating. More projects are breaking ground in 2025 and 26. When you see continuous investment like this, it means developers believe demand will stay strong. We're also seeing a major demographic shift. Young professionals who are priced out of Brooklyn and Manhattan are discovering New Rochelle. They want this suburban lifestyle, but they still want restaurants, nightlife, and culture. New Rochelle is delivering that. You know, the rental market's pretty strong too. With all the new development, investors are seeing solid rental yields, especially from young professionals and small families. My prediction, New Rochelle is going to see significant price appreciation in 2026 as more people wake up to what's happening there. Get in now before it becomes the next Hoboken. Also, then you don't have to go to New Jersey. You know what I mean? Just saying. All right, the second suburb, and I love this one, Beacon in the Hudson Valley. This one is already on the radar for some, especially me, but it's still early enough that you can get good value. Beacon is transformed from a forgotten industrial town into an artsy, hip community that's attracting creatives, remote workers, and weekenders from the city. The main street is full of galleries, boutiques, farm-to-table restaurants, and craft breweries. The natural beauty is incredible. You've got the Hudson River, hiking at Mount Beacon, proximity to Cold Springs, and of course, the charming town. For people who want outdoor lifestyle with culture, it's perfect. And here's why 2026 could be a big year for Beacon. The Metro North Hudson line is seeing increased service and reliability improvements. As more companies embrace the permanent remote work, the 90-minute commute to Grand Central becomes totally viable for people who only go into the office 2, maybe 3 days a week. We're seeing New Yorkers who sold their city apartments during the pandemic and bought in Beacon full-time. We're seeing weekend home buyers who eventually decide to make it their primary residence. And we're seeing investors buying rental properties to capitalize on the Airbnb and weekend rental market. Prices have gone up already, yes, but compared to similar artsy towns like Woodstock or Rhinebeck, Beacon still offers better value. Look at the taxes, I'm pretty sure it's better there too. And as the Hudson Valley continues to gain popularity, Beacon is positioned as one of the main beneficiaries. The lifestyle here is off the charts. If you value nature, art, community, and you still want access to New York City, Beacon checks every box. Suburb number 3, Stamford, Connecticut. Now, some Some people might say Stamford is already established, and they're right, but here's why it's still a play for 2026. Stamford has always been a corporate hub with major companies headquartered there. But what's changing the residential demand? As Manhattan office workers are given more flexibility, living in Stamford and commuting in 2 or 3 days a week is becoming very attractive. The Metro North Ride to Grand Central is about 50 minutes. You get significantly more space for more money compared to Westchester towns at the same distance. A 3-bedroom house in Stamford might cost you $800,000, whereas in similar Westchester towns, you're looking over $1 million. Stamford also has a real downtown with high-rise buildings, restaurants, nightlife, and a waterfront. Doesn't feel like a sleepy suburb. It feels like a small city with suburban benefits. And look at the taxes there. Here's the infrastructure play. Connecticut is investing heavily in transit improvements and downtown development to attract more residents and businesses. The state is offering tax incentives for companies to relocate or expand in Stamford. When you see government investment like this, signals long-term growth potential. We're also seeing a demographic shift. Younger professionals who want urban amenities without New York City prices are choosing Stamford. Families priced out of Westchester are choosing Stamford. And investors are buying rental properties because corporate housing demand is steady. The rental yield in Stamford is strong. With so many corporate employees on short-term or flexible work arrangements, furnished rentals and corporate housing are in high demand. My take? Stamford is undervalued relative to what you actually get. And as more people discover the quality of life to price ratio, demand is going to push prices up. And also, depending upon our election, if you start getting taxed over $1 million of income, hello, Connecticut. Number 4, Glen Cove on Long Island's Gold Coast. This is a sleeper that most people aren't talking about yet, which is exactly why you should be paying attention. Glen Cove sits right on the Long Island Sound with beautiful waterfront views. It has a charming downtown, good schools, and it's only about 45 minutes to Penn Station on the Long Island Railroad. Here's what's happening. Glen Cove has been undergoing significant redevelopment, especially along the waterfront. New mixed-use developments, parks, restaurants, and public spaces are transforming what was once industrial waterfront into a destination. The town is actively trying to attract young families and professionals. They're investing in infrastructure, improving transit connections, and creating a more walkable, vibrant downtown. And here's the affordability angle. Compared to nearby towns like Locust Valley or Seacliff, Glen Cove offers better value. You can still find single-family homes in the $700 to $900 range, which is reasonable for Long Island waterfront proximity. We're seeing spillover demand from Brooklyn and Queens. Families who want to stay on Long Island but can't afford the more expensive North Shore towns are discovering Glen Cove. And once people visit and see what the waterfront and the redevelopment happening, they're sold. The lifestyle appeal is strong. You get waterfront access, good schools, a real downtown with restaurants and shops, and you're close enough to the city that commuting is viable. My prediction, as Glen Cove's waterfront development completes over the next year or two and more people discover what's happening there, prices are going to climb. So this is your opportunity to get in before that happens. And suburb number 5, I'm going to say it, Yonkers. Yes, Yonkers. I know some people still have outdated perceptions of Yonkers, but those people are missing a massive opportunity, okay? Yonkers is the 4th largest city in New York State, and it's literally right on the border of the Bronx. The Metro North Hudson line runs through it multiple stops. Some parts of Yonkers are a 25-minute train ride to Grand Central. That's close to the many Manhattan neighborhoods. Let's be honest. Lower East Side, where are we? Here's why Yonkers is positioned for growth. The waterfront has been completely redeveloped with new residential buildings, parks, and retail. The downtown area, like Getty Square, are seeing investment and revitalization. And the pricing is still incredibly affordable compared to, I don't know, anywhere else close to Manhattan. You can find condos in Yonkers for $400,000 to $600,000. Single-family homes, you can even get around $800,000. Show me anywhere else within 30 minutes of Midtown with that kind of pricing. I mean, it doesn't exist. The demographic shift is happening fast. Young families, first-time homebuyers, and investors are all moving into Yonkers. The perception is changing. And here's the infrastructure play. Yonkers is seeing major transit improvements and significant private investment in mixed-use development. When you see this combination of public and private investment, it signals confidence in future growth. The rental market is strong because of proximity to the city and affordability. Investors are buying properties, renovating them, and renting to young professionals who work in Manhattan but want more space and lower rent than city living. Yonkers is a value play, plain and simple. And I believe in 2026 and beyond, we're going to see significant price appreciation as more people realize what's actually available here. So there you have it. 5 New York City suburbs that I believe are positioned for major growth in 2026. New Rochelle, Beacon, Stamford, Glen Cove, and Yonkers. What do they all have in common? They're not in New Jersey. I'm kidding. Strong transit connections to Manhattan, ongoing infrastructure and development projects, affordability relative to neighboring towns, demographic shifts bringing in new buyers, and lifestyle appeal that attracts families and professionals. If you're thinking about buying in the suburbs and don't want to wait until everyone else figures it out, by the time a suburb is labeled hot, I mean, the best deals are already gone, right? Do your research, visit these towns, talk to local brokers who I will put you in touch with. You tell me where, I got someone for you. Understand the specific neighborhoods neighborhoods within each suburb, because even within these towns, some areas will appreciate faster than others. And if you're serious about making a move, you need expert guidance to navigate these markets effectively. So, which New York City suburb do you think will explode in 2026? Drop your predictions in the comments, and I would love to hear from you and hear all about what you're thinking. Maybe you know about a town I didn't mention. Maybe you already live in one of those areas and you're seeing the changes firsthand. Let's have the conversation in the comments, because why not? So much fun for me. And if you're a serious buyer looking to invest in the New York City suburbs before prices soar, I'm offering exclusive limited free consultations. This is your opportunity. We will sit down, we will go over, hey, which one of these neighborhoods might actually be right for you? And then I'm going to make sure that you are in touch with the right person to create a customized strategy for your suburban purchase. We'll talk about, again, the neighborhoods, what offers the best value, how to time your purchase, what that looks for you in terms of their infrastructure and development. And then maybe you have something here that we need to sell. We can time it out properly because my referral partners are in these areas. We can make sure that you are carrying 2 properties in the smallest amount of time possible, right? If you want to position yourself ahead of the market, click the Calendly link below in the description box for your free consultation today. And if you're interested in learning more about luxury buying strategies, check out our Luxury Buyer Masterclass. While it's focused on New York City luxury property, many of the principles apply to high value suburban purchases as well. So don't wait until 2026 when prices have already jumped. Get in now while there's still opportunities. And I'm Miriam Wheelock, a associate real estate broker here at Keller Williams, and I'm your host of Luxury Living New York City. Thank you so much for watching this. And until next time, please remember us as your global real estate team of choice. Bye guys.